Why are you broke? Let's talk about growth stocks while I make some fruit leather. Victim of fruit today is all leftover fruit that I need out of my freezer. Okay, basically, let's cut the crap and get straight to the gold mine. To the gold mine. Growth stocks. Think of them like the sleek sports car on the stock market. They're in the fast, flashy, and if you know how to handle them, lane. They can take you places that you've dreamed of. But what exactly are these bad boys, and why should you care? Let's break it down. Growth stocks are like those high-energy powerhouses that never seem to slow down. Companies with growth stocks are ambitious overachievers of the corporate world, always hustling to expand and innovate and push past boundaries. They're not paying you at dividends, no regular cash flow here, but who needs that when you know the value of your stock could skyrocket? The main idea with growth stocks is that you're hopefully going to get capital gain. What capital gain is in like simple terms is pretty much if I sold you my tomato for $2 and then later, let's say, I wanted to buy back that tomato, but you want to sell it for a higher price than $2. So you sell it for $4 because your tomato is now worth $4. You get $2 in capital gains if I buy that off of you for that. With growth stocks, let's imagine like a rocket ship blasting off into space. No stops, no pauses, just zooming towards the stars. That's a growth stock, baby. Fasten your seatbelt and you have to enjoy the ride. They're a lot more risky in comparison to other stocks. This is something you have to keep in mind. With growth stocks, they have high potential and high risk. Growth stocks are like the edgy new restaurant in town. If it takes off, you're going to be raving about it for years, but if it flops, you're stuck with a nasty taste in your mouth. These stocks have potential for massive gains, but they're not for the faint of heart. With growth stocks, you usually don't get dividends. Unlike the cushy, comfortable dividend stocks that send you money regularly, growth stocks reinvest profits back into the business. This reinvestment fuels their rapid expansion. So while you can't see your cash account right away, the long-term payoff could be huge. Stocks are also found often in industries that are shaking things up. Think like tech, healthcare, and renewable energy, to name a few of these companies that are trailblazers. Look, here comes a consequence. Look, here comes a consequence of me. So why are growth stocks so appealing? Darling, growth stocks are where the magic happens. You're not here for the slow and steady game. You're here for the thrill. You want the excitement and yes, the potential to rake in a serious crash. Growth stocks offer that in spades. Growth stocks are like the relationship you have that is super exciting, thrilling, but rocky and emotional, and it feels like an emotional roller coaster. You can win big and get an awesome payout, or you can lose a lot. And when you're younger, growth stocks are something that you can handle better because when you're younger, you have more time to recover in the market, which means you have more time to take greater risks. And taking greater risks can be a big edge in your portfolio and provide growth that you need. But also, if you're more on the stable side of investing like me, I avoid growth stocks. Why? Because they stress me out and I like to be a passive investor. Now, you've probably definitely heard of some popular growth stocks. Think like Tesla, Amazon, Nvidia, even Shopify. But there are various other types of growth stocks within the market as well. If you're older and getting into investing, I would be careful about the growth stocks that you have in your portfolio. But if you're younger, it's better to have good growth stocks in your portfolio as well because you can afford to take risks. That doesn't mean you have to, though. I'm someone that avoids growth stocks. Also isn't meaning that if you're older, you can't use growth stocks either, because you definitely can. Also, I always want to clarify, I'm not trying to give you financial advice or tell you what to do with your money. I'm just here to give you an idea of how to improve your financial literacy so that you can make better and wiser decisions with your money. You can use honey for this step too, but I'm using maple syrup today because it was cheaper than honey, so it's going to be my substitute for the week. Growth stocks are not for everyone, but if you're looking for something to spice up your portfolio and you've got a stomach for a little risk, they could be your ticket into the big leagues. Do your homework and stay in the know. A sheet. We're gonna spread her out. We're gonna spread her farther than your ex could ever spread you. Sorry, that was really not, sorry. Love it. Hope I didn't make you uncomfortable. That was, under consumption court for reals out here. Once you've spread that fruit rubber farther than your ex could ever spread you, we're gonna put her in the freezer for overnight. Mission success. And here, my friends, is the fruit letter. Okay, cheers. This little piece of one. This is really good. Always make sure to plan for your future financial wealth and health. Love you. Bye.